Welcome to the FX, and here we're looking at the US dollar. And last time we spoke, we were looking at this move down through here. So we were looking for a B wave in 3 waves, and that's unfolded nicely now. And we're looking that down into the 79.70 area there, and that's there. So we're looking for wave C to the upside. Now, wave C and wave A here sometimes have a equality about them. However, when you've got a large number like 80 sitting in the way, it can kind of skew things a little bit. But look, anyway, the 61.8 retracement level that we're looking for is around the 80-20 mark up through here. It's also too, the B wave here is a little bit small compared to the A wave here. So this also may be just one leg of it here. So we need to be mindful that that it also could grow as well. So instead of having an A and a B and a C to here for the B wave, we can have an A and a B and a C to here and then up through here. But either way, it shouldn't pull back down much further than here anyway. So anyway, that's what we're sort of looking for there. And of course the euro would be doing the opposite, wouldn't it? So when we're looking at the euro here, we're looking just on the 4-hour chart here for the bigger picture. We had been looking for, if I can just move these, we were looking for an A and a B and a C, which we do have. But as I mentioned on the US dollar as well, this particular 3-wave structure here, which is all correct, may end up just being one leg of another one here before we move down. So we need to be mindful of that. So if you're going to short, well, then you'd need to sort of really have that 138 as the resistance, but you could also do it from the 138.20 area as well. And let's go in and have a bit of a look at that here. So yesterday we were looking for this bounce in 3 waves to this area through here, and we've got that. And moving down, just got to be mindful that we don't get, if this is an A wave and this is a B wave here, nice and sharp, then the C wave will be 1, 2, 3, 4, and 5, probably just piercing the top here, trying to cover that gap up there, which it will do at some stage, and then that roll down from that point there. The market is still overbought at this current price, so that pressure to the downside is still there. And this also too, this little move up here is corrective. Okay, so that means that this move down here will be taken out at some point. So just drilling into that a little bit further if we can. So the current move down from wave C there that we had, because we were looking for the 138.50 there, which came in on the exact price that we were looking for, and the same with the US dollar as well. That's 79.70, just right on the nose there as well. So look, anyway, this does appear to be 5 waves down through here. That would be the basically down for 1 and 2 here, the 3rd wave nice and strong, 4th and 5th, and then we're looking at this here as being wave 2 here, but it does appear to be in 5 little waves here. But look, it could be the corrective wave here, and it's pulled back to supply area, so it can make its way to the downside now, which would be further down through here. So yeah, that's what we're looking at, wave 3 to move down through here. Right, the next one, the Australian dollar. Yesterday we'd been looking at this pattern here, and we noted that it was corrective in its first leg down here, so we understood that we would be getting it could have finished there and could have moved straight up from there, but we also understood that it could be a larger correction because it was at a larger number here, and that's the case. So we were looking for an A wave, a B wave in 3 waves, and then we're looking for the C wave down here in 5 waves. So we've got 1, 2, 3, 4, and 5. That could be it done and dusted there. So we'd need to see a move to the upside here. The move currently to the upside here would want to see an impulse wave, and from this low here we can see that we've got 1, 2, and 3 here. So we've just really, it's not really proved itself as an impulse wave. It's more like a corrective wave here. So let's just go in and have a little look at that as such. So from the low here of the C wave, we can see that we've got a nice 5-wave structure up through here. Not that we can recognize all of it, but basically the 1, the 2, and all of the 3rd wave up through to here. And the 3rd wave, the 1, the 2, the 3, the 4 in here, well, the A, the B, and the C for the 4th and up for the 5th. So we do have a nice 5-wave structure here, and then we've got our corrective move back after that. So this move up through here is also impulsive as well, but as I just mentioned, it makes this whole thing in 3 waves here. So that makes it corrective as such. So that's a little bit dangerous as long as it doesn't go below this point here. If it goes below this point here, then we'll have overlapping wave structures, because this could actually be here, because we're looking for an impulse wave to the upside. So this can be wave 1 and wave 2 here of, say, 1 degree here and wave 2 here. Now this can be of the next, and then we're going up for wave 3 here. So this could be the next move up. So up for 1 here, then A and a B and a C coming back in here for wave 2, and then wave 3 up here. So that could be the case. Little bit sort of unknown. So look, if we get support back on 93.72, always a nice number to work with. So if we get support back on there, then you'll know to go long there, but you wouldn't want to overtrade. So you put a small position here and then look to add on the 93.80 as well above here. So that would be to the long side there. But if it moves below this level here, then we've got a bearish overlapping structure from here, and then there will be more downside from that point there, and then we'd have to go back over our wave count and see that where we've gone, where the error's been made. And I've tried to look at it, but this move down here is in 3 waves here, so it makes whatever happens here corrective. So you know, maybe this is a 4th wave back up here, and there's one more low to be made here. But anyway, you'll know that that move lower, that overlapping structure here is the critical point here. Okay. Just want to have a look at the Australian yen here. It's just the daily chart here. We were looking at this consolidation here, and we thought we may have had a breakout just before, but we haven't got that. But we may have it now, and that's why I want to revisit it now. So we've got the support on the 95. We've got this nice 3rd wave up through here, and we've got this 4th wave here that's consolidating here sideways. And 4th waves do get a bit complicated, and this is the situation here. So we thought we may have had the break from this point, and it's not the case. We've got another low to come in. So we're looking at it again. But in this case here, we've got a nice 5-wave structure up through here. So after 5 waves, we know that we get a counter trend, yeah, and then we get pulling back 50, anywhere from 40 to 60% back, you know, and then we've got to move up through here. So we can have up for 1 and back for 2 here, organizing itself now, and then a move up through here. So, you know, if you understand corrections a little bit, then, you know, this is a little correction here, an A and a B and a C here, and that's kind of what we're looking for here. So with that in mind, well, let's just drill in here. You can start to see from the low here the 5 waves up through here, so that's good. And now we'll be looking for a sort of retracement level. Got to be careful with these, really, you know. So anywhere from the 50 to 60% back through here, but that may not be the case. It may only come back into the, you know, into the 38.2 retracement level from here as well. So that's something that we need to be just mindful of. And just drilling in here on the 15-minute chart, that 5 waves becomes quite clear now in terms of the 1, the 2. Nice 3rd wave here with 5 clear 5 waves in it. And then we're pulling back here, and then for the 4th, and we've got 1, 2, 3, 4, and 5 here. And as I mentioned, if we look at, I'm just going to leave these in here because I can see that, you know, even on the daily point of view, this market is still oversold at this current price here. So it can you know, push up from where it is, or somewhere. This would be the look anywhere between here. We're looking for some type of corrective pattern in here like this. So you need to see something like this, and then look for that next move up through here. Because we've got 5 here, it means we'll get another 5 over here. That's the point there. So, you know, it's the Easter break. So I'm not sure what markets are open or not, but when and so forth. But anyway, just keep an eye on this pattern here. Right, the Euro Australian. We were looking. This is the 1 hour chart. We were looking at this as being. We noticed we had 3 waves here, so we know that we'll make a new low here. And I thought we would have made it through here in a 5-wave structure down through here, but I could see that when this came into play that we didn't have that. We just had like a 3-wave structure down here as an A wave, a B wave, and then the C wave in 5 waves here. So I knew something was a little bit fishy. So we were looking for a C wave up here, and the last time we spoke, I think we were in here somewhere at wave 4. Might have been here, I'm not sure, but we're looking for wave 5 up. Well, we've got that, so we can look at this here now as an A wave, a B wave, and a C wave coming into here. So that means that we should make one more new low down through to here. So there is obviously going to be support in this block here. So we're going to get that bounce off the 147.0 here, but we should still see further downside. I'm just double checking. I mean, that's at the 61.8 retracement level here of this 5 waves up here. So we do need to be a little bit careful too, in case that somehow this is an error in here, and this is actually the low in here, and we do have 5 waves up through here, but I wouldn't worry about that just yet. But if that's the case, then we'd still be looking for an A wave, a B wave, and a C wave here, and then a build up here. So if you start to see a build up over this side here, then you'll know that we're going to go higher from here. But at this stage, let me just have this little move here is corrective, so that makes this a little A wave, B wave, and C wave here. So that will fold back down here and make a new low here. So it will help with the move to the downside. So we're still moving. We'll be still moving down from that point. The yen crosses. This is the pound yen here, and we were mentioned yesterday in the text. I don't know if people actually read the text, but there's always some little good bits in there. So essentially that we were looking for either the 170 become the retested resistance, or the 170.30, the top of subgroup 1, to become the support. And that was the case, and we're looking at this impulse wave up through here now. So if you're long from here, you may have got to the 72 here and got out. That's fine as well. But I do see this as a wave 4 here, and wave 4 would pull back 38.2% of the 3rd wave here, so you can work that out. And then we'll look for wave 5 moving up to further up. Now wave 5 here can be the same length as wave 1 here, because the extension was in wave 3 here. So that would take us up to 172.50 or 172.72 will be another important number up through there. So just trying to drill in here to have a bit of a look at this here. I mean, you can make no mistake about this. This is corrective, and it's typical sideways wave 4. Yes, it could drop lower through here, but the main point is that, and it's quite nice if it does drop down through to here and then gets back up onto 71.72. But anywhere above, any support that you see from here on in on 71.72, you know that you'll be going to the upside. So you glean a small position, and then you'd look for support on 71.80 and so forth. You may look at all of this here and think, oh my God, I don't want anything to do with that. Well, you always get the opposite of what you're looking at. So essentially that, the more you understand about corrections, the better off you are. It is the corrections that take your money, but it is also the corrections that engineer the next trend from those corrections. So they are important to understand. But anyway, this pound yen cross is heading to the upside. So the euro yen cross could also push higher as well, and on the 4-hour chart here it has pushed higher. But looking at this particular pattern at this point here, just this pattern here reminds me of being corrective in here. So we need to be a little bit careful that this can be an A and a B and a C wave, and finishing in here we need to drill in and have a look and see where we're sort of up to through here. But because of the pound yen pushing higher, we need to be mindful that that it could push higher as well. So this A, B, and C here can finish here, or we can have this up here as wave 1 to here, and then an A and a B and a C and a pullback into here for a corrective move up. So if that was the case, if the market moves back down below 141 here, and then moves up and finds support on top of 14130, the top of group 1 here, then it will move up from that point there. Otherwise it will just go down here, little cross here, and then move further down.